Hello, my dear students. A very warm welcome to all of you in Shri Jayendra Rank Zone. I am your friend and mentor for the subject Principles and Practices of Accounting. In this lecture, we'll begin with Accounting Chapter 8, Unit 5, Death of a Partner. Let us begin. Learning Outcomes. After studying this unit, you will be able to understand the implications of the excess money received on death of a partner from the joint life policy from the insurance company in this account of the partnership. Learn the journal entries required to record this transaction. Understand the accounting implications if death of a partner takes place at any date during the accounting year. Learn to record this transaction and how to record payment of profit to the executor. Payment of profit to the executor of the deceased partner. Next, be familiar with other accounting treatments in case of death of a partner which are similar to the explained in case of retirement of a partner. Overview of the unit. Death of a partner, revaluation account or profit and loss adjustment account for revaluation of assets and liabilities, payment of deceased partner's share, transfer of reserve, goodwill, transfer of profit and loss on revaluation of dead partner, profit or loss on account of revaluation account is transferred to old partners in their old profit sharing ratio, and treatment of joint life policy and separate life policies. Introduction. Business of a partnership firm may not come to an end due to the death of a partner, as it is known as reconstitution of partnership. Other partners shall continue to run the business of the firm. The problem arises on the death of a partner are similar to those arising on retirement. Assets and liabilities have to be revalued and the resultant profit or loss has to be transferred to the capital accounts of all partners, including the deceased partner. Goodwill is dealt with exactly in the way already discussed in the case of retirement in the earlier unit. Treatment of joint life policy will also be same as in the case of retirement. However, in case of death of a partner, the firm would get the joint life policy value. The firm would get the joint life policy value and not the partners. Right of outgoing partner in certain cases to share subsequent profits as per provision of section 37 of the Indian Partnership Act, where any member of the firm has died or otherwise ceased to be a partner and the surviving or continuing partners carry on business of the firm with the property of the firm without any final settlement of accounts as between them and the outgoing partner or his estate, then in the absence of a contract to the contrary, the outgoing partner or his estate is entitled at the portion of himself or his representative to such share of profits made since ceased to be a partner as may be attributable to the use of share of the property of the firm to the interest at the rate 6% on the amount of share of the property of the firm, provided that whereby contract between the partners an option is given to surviving or continuing partners to purchase the interest of a deceased or outgoing partner, and that portion is duly exercised. The estate of the deceased partner or the outgoing partner or his estate, as the case may be, is not entitled to any further or other share of profits, but if any partner assuming to the act in exercise of the option does not in all material respect comply with the terms thereof, he is liable to account under the foregoing provisions of this section. This way, the outgoing partner has the option to receive interest at the rate 6% per annum or the share of profits earned on the unsettled amount for the period till his dues are settled by the firm. In the absence of any contract made to the contrary, it may be noted that the outgoing partner is not bound to make election under the share of profit that would be payable to him as has been ascertained. For example, A, B, and C are partnership business sharing profits and losses equally. C retires on 31st October 2017. The capitals of the partners after all necessary adjustments stood at 50,000, 75,000, and 1,20,000 respectively. A and B continued to carry on business further without settling the accounts of C. Final payments to C is made on February 1, 2018. The profit made during the period of these 3 months is 28,000. Under Section 37 of the Partnership Act, C can exercise any of the following two options. Option 1. Share in subsequent profits of the firm. Profits made till date is 28,000. C's share equals 1,20,000 divided by 2,45,000 in proportion of capital 13,714 or interest at 6% per annum. So 1,20,000, 6% for 3 months, 1,800. Since option 1 is beneficial for C, he will necessarily go for this proportionate share of profit and choose option 1. Amount payable to legal representative of dead partner. When the partner dies, the amount payable to him or her is set to his legal representative. The representative are entitled to the following. First, the amount standing to the credit of capital account of the deceased partner, interest on capital if provided to the partnership deed up to the date of death, say 2 months, 3 months, or whatever, share of goodwill of the firm, share of undistributed profits or reserve, share of profit on revaluation of assets and liabilities, share of profit up to the date of debt, share of joint life policy. Calculation of profit up to the date of death of a partner. Such profits is calculated through profit and loss suspense account. After ascertaining the amount due to the deceased partner, it should be credited to his executor's account. If the death of a partner occurs during the year, the representative of the deceased partner are entitled to his share of profits earned till date of his death. Such profit is ascertained by any of the following methods. First, time basis. Second, turnover or sales basis. We'll begin with the time basis. In this case, it is assumed that the profit has been earned uniformly throughout the year. For example, the total profit of previous year is 2,25,000 and a partner dies 3 months after the close of the previous year. The profit of 3 months is 31,250, that is 1,25,000 multiplied by 3 by 12. If the deceased partner took 2 by 10 share of profit, his share of profit till date would be 6,250, that is 21,250 the profit multiplied by 2 by 10, that is his share of profit. Next is turnover or sales basis. In this method, we have to take into consideration the profit and total sales of the last year. Thereafter, the profit up to the date of death is estimated on the basis of sale of the last year. Profit is assumed to be earned uniformly at the same rate. Legal representative. First, drawing, interest on drawing, share of loss on the revaluation of assets and liability, share of loss that have occurred till date of his or her death. Arun, Tarun and Neha are partners sharing profits and losses in the ratio of 3:2:1. Neha dies on 31st May 2016. Sales for 2015-16 amounted to 4 lakh and profit is 60,000. Accounts are closed on 31st March every year. Sales from 1st April 2016 to 31st May 2016, 2 months, is 1 lakh. Calculate the deceased partner share in the profit up to the date of death. Profit from 1st April to 31st May on the basis of sales. If the sales are 4 lakh, the profit is 60,000. If the sales is 1 lakh, profit is 60,000 divided by 4 lakh multiplied by 1 lakh. So profit would be 15,000. Neha's share is 1 by 6. So 15,000 multiplied by 1 by 6, 2,500. Alternatively, profit can also be calculated as follows. Rate of profit is 60,000 divided by 4 lakh. Sale is 4 lakh, profit is 60,000. That is 15%. Up to the date of death, the sales of the firm 2 months is 1 lakh. Profit is 15% of 1 lakh. So 1 lakh multiplied by 15 by 100 equals 15,000. The above adjustments are made in the capital account of a deceased partner and then the balance in the capital account is transferred to an account opened in the name of his executor, legal hire. The payment of the amount of deceased partner depend on the agreement. In the absence of agreement, the legal representative of the deceased partner is entitled to interest at the rate 6% per annum on the amount due from the date of death till the date of final payment. Special transactions in case of death. Joint life policy. In case of partnership, partners generally get joint life policy in the name of all the partners. If the partners expires, the partners are entitled for the joint life policy. Joint life policy methods. First, premium method. Second, surrender value method. Third, joint life policy reserve method. Method 1, premium method. If the joint life policy does not appear in the balance sheet, then the firm will gain on the death of a partner. For example, A, B and C are in partnership sharing profits and losses at the ratio of 5:3:2. They took a joint life policy of 1 lakh. Now if A dies, the firm will receive 1 lakh. from the insurance company. The journal entries will appear as follows. Bank account debit 1 lakh to joint life policy account 1 lakh. And this joint life policy, the amount received for joint life policy is distributed between the old partners in their old ratio. So joint life policy account debit 1 lakh to A's capital account 50,000, to B's capital account 30,000, to C's capital account 20,000. This was premium method. If joint life policy appears in the balance sheet at surrender value, then the firm will gain on the debt of a partner. For example, A, B and C are partnership sharing profits and losses at the ratio of 5 is to 3 is to 2. They took a joint life policy of 1 lakh which is appearing in the balance sheet at the surrender value of 10,000. Now if A dies, the firm will receive 1 lakh from the insurance company. Bank account debit to joint life policy 1 lakh, 1 lakh. Joint life policy account debit 1 lakh minus surrender value, that is 10,000. 90,000 would be distributed in the ratio of 5, 3 and 2. So A's capital account 45,000, to B's capital account 27,000, C's capital account 18,000. Third method, JLP reserve method. If joint life policy appears in the balance sheet at surrender value along with the joint life policy reserve, then the firm will gain on the debt of a partner and reserve will be distributed among partners. For example, A, B and C are partnership sharing profits and losses in the ratio of 5, 3, 2. They took over joint life policy of rupee 1 lakh which was appearing in the balance sheet at surrender value of 10,000 along with the JLP reserve. Now if A dies, the firm will receive 1 lakh from the insurance company. First entry, bank account debit to joint life policy 1 lakh. Next entry, joint life policy account debit 90,000 to A's capital account 45,000, to B's capital account 27,000, to C's capital account 18,000. This is for JLP amount minus surrender value. And next, joint life policy reserve account debit 10,000 to A's capital account 5,000, to B's capital account 3,000, to C's capital account 2,000. Special transactions in case of death, separate life policies. Instead of taking one joint life policy in the name of all the partners may take individual policies on the life of respective partners. The premium paid is charged on the profit and loss account. On the death of a partner, then only the amount for which the deceased partner was insured would be recovered from the insurance company. The policy of the surviving partner will continue to survive, but the surrender value of the policies in the surviving partners would also be taken into account for the purpose of calculating the amount payable to the legal representative of the deceased partner. In other words, the legal representative would be entitled to receive share in surrender value equivalent to the profit sharing ratio of the deceased partner, bank account debit to the assured value to separate life policy of deceased partner, separate life policy of deceased partner account debit, separate life policy of remaining partners account debit to executors account, the partners who died, to remaining partners, being the total of assured value of deceased partner of life insurance policy and surrender value of other partners' life policy distributed in the profit and loss sharing ratio. Example: Sona, Gabbu and Amit are partners in the ratio of 1 is to 1 is to 3 is to 1 is to 1. Policy is of 1 lakh, Gabbu 2 lakh, Amit 3 lakh. Surrender value is 10,000, 20,000, 30,000. If Amit dies, Amit will execute 3 lakh multiplied by 1 by 5 and 1 by 5, 10,000 plus 20,000 equals 60,000 plus 6,000. Special transactions in case of death, payment of deceased partner's share. The basic distinction between the retirement and death of a partner relates to finalization of amount payable to the executor of the deceased partner, although revaluation of goods done in the same way as it has been done in case of a retirement. In addition, the executor of the deceased partner is entitled to share of profit up to the date of death. For example, A, B, and C are partnerships sharing profits and losses in 2 is to 2 is to 1. A died on 15th April 2016. The firm closes its books of accounts as on 31st December every year. So the executor of A is entitled for 3.5 month profit. If A's share is immediately paid off, then profit for 2016 can be taken as the base of calculating 3.5 months profit in the year 2016. If Messrs A, B and C earned 96,000 in the year 2015, then 3.5 month profit is 28,000. A's share comes to 28,000 multiplied by 2 by 5, that is 11,200. Journal entry for the same is as follows: joint profit and loss suspense account debit 11,200 to A's capital account 11,200. At the end of the year, profit and loss suspense account will be transferred to profit and loss account because profit is found out at the end of the year. I believe you understood. Illustration 1. The following was the balance sheet of Oman Company in which X, Y and Z were partners sharing profits and losses in the ratio of 1 is to 2 is to 2. As on 31st March 2016. Mr. Z died on 31st December 2016. His account has to be settled under the following terms. Look at the terms. Let's see the balance sheet. Assets are given: goodwill, building, computers, inventories, trade receivables, cash at bank, and investments. And liability side, trade payables, bank loan, general reserve, capital of X, Y, and Z. Goodwill is to be calculated at the rate of 2 years purchase on the basis of average 3 years profits and losses. The profits and losses of the 3 years were detailed as below. Year ending on 31st March 2016, 30,000 profit. 31st March 2015, 20,000 profit. 31st March 2014, 10,000 loss. Profit for the period from 1st of April 2016 to 31st December 2016 shall be ascertained proportionately on the basis of average profits and losses of the preceding 3 years. During the year ending on 31st March 2016, car costing 40,000 was purchased on 1st of April 2015 and debited to travelling expenses account. It's an error for which the depreciation is to be calculated 20%. It is also an error. This asset is to be brought into account at the depreciated value. We need to rectify it. Solution. First, calculation of goodwill and Z share of profit. Adjusted profit for the year ended 31st March 2016, 30,000. Profit given 30,000. Add cost of car wrongly written off less depreciation depreciation for the year 2015-2016 at the rate 20%, 40,000 multiplied by 20%, 8,000, 32,000. $62,000 total. Average of last 3-year profit and losses. Year ended on 31st March 2014. 31st March 2015. 31st March 2016. For 2014 it is minus 10,000. 2015 it is 20,000 and 2016 it is 62,000. Total is 72,000. Total is 72,000. Average profit equals 72,000 divided by 3 equals 24,000. Average profit 24,000. Goodwill at 2 years purchase. So 24,000 multiplied by 2, 48,000. Z share of profits from the period 1st April 2016 to 31st December 2016, 24,000 multiplied by 9 by 12, Z share 2 by 5, 7,200, 7,200. Next, goodwill calculated at the time of death of partner Z, rupee 48,000. Partner XYZ, old share of XYZ 1 by 5, 2 by 5 and 2 by 5. New share 1 by 3 and 2 by 3. Gain 2 by 15, 2 by 15. Sacrifice is 2 by 5. Pass adjusting entry for goodwill. Gaining partner's capital account debit to sacrificing partner. X capital account debit. Y capital account debit to Z capital account 19,200, 6,400 and 12,800. 1 is to 2. Revaluation account. To inventory account. Fall in the value of inventory 4,000. To computer account 30,000. To investment account 4,000. By building account 20,000. By loss transferred to 18,000 is the loss, would be distributed in the partner's capital in old ratio 3600, 7200, 7200. 1 is to 2 is to 2. Next, partner's capital account. Partners capital account. XYZ. Buy balance brought down. Opening balance 40,000, 80,000, 80,000. Distribution of general reserve 6,000, 12,000 and 12,000. Buy X. NY 19,200 for the adjustment of goodwill. Buy car 6,400, 12,800, 12,800. Buy revaluation loss 3,600, 7,200, 7,200. Buy goodwill account 6,000, 12,000, 12,000. Buy Z account 6,400, 12,800. Buy profit and loss suspense account 7,200. Z share of profit. Close it. 52,400, 1,04,800, 1,31,200. 1,12,000 in case of Z to Z executor account. 36,400 in case of X. In case of Y, 72,800 to balance carried down. Prepare balance sheet. Balance sheet. Assets, liabilities. Asset, right building. 1,40,000. Car 32,000. Inventory 16,000. Computers 50,000. Investments 6,000. Trade receivable 20,000. Cash at bank 20,000. P&L suspense account 7,200. In case of liability, trade payables 20,000. Bank loan 50,000. Capital account X and Y 36,400, 72,800, and Z executor account 1,12,000. Balance sheet totaled at 2,91,200. I believe you understood. Let us continue. Illustration 2. The following is the balance sheet of Messrs. ABC Brothers as at 31st December 2015. Assets are given: machinery, furniture, fixture, cash, inventories, trade receivables less provision for doubtful debts, capitals A, B, and C, general reserve, and trade payables. C died on 3rd January 2016, and the following agreement was to be put into effect. Assets were to be revalued: machinery to 5,850, the old value of machinery is 5,000. Furniture to 2,300, the old value of furniture is 2,800. Inventory to 750, the old value of inventory is 950. So there is a decrease in the value of inventory. Goodwill was valued at 3,000 and was to be credited with his share without using goodwill account. Next, rupee 1,000 was to be paid away to the executors of dead partner, that is C, because C died on 5th January 2016. Required: first, journal entry for goodwill adjustment, revaluation account and capital accounts of the partners, and which account would be debited and which account should be credited if the provision for doubtful debts in the balance sheet was to be found unnecessary to maintain at the death of C. I believe you understood the question. Let us solve it. Solution. Solution. Journal entry in the books of the firm. In the books of the firm. Gaining partners capital account debit. So A's capital account debit, B's capital account debit, to sacrificing partners capital account, that is C's capital account, 1000, and over here on the debit side 500, 500, being the required adjustment for goodwill through the partners capital accounts. Next, revaluation account, revaluation account, particulars amount, particulars amount, increase in the value of machinery by machinery, 5850 minus 5000, 850, to furniture, 2800 minus 2300, 500, to inventory account, 950 minus 750, that is 200, 150, balancing figure, to partners capital account, to partners capital account, 150, A, B, C, 50, 50, 50. I believe you understood. Let us make partners capital account now. Partners capital account, partners capital account, A, B and C, A, B and C. By balance brought down, 4100, 4100, 4500. By general reserve, 500, 500, 500. By revaluation profit, 50, 50, 50. Goodwill distribution, by A capital account, by B capital account 500 500 to C 500 in A and 500 in B. I believe you understood till here. 4650, 4650, 6050. In case of C, 6050,000 we need to pay, so to cash account, and rest 5050 to executors account, to executors account. In case of B and C, to balance carried down 4650, 4650, 4150, 4150. I believe you understood this. Third, with which account would be debited and which account would be credited if the provision for doubtful debts in the balance sheet was to be found unnecessary to maintain at the debt of C? Provision for doubtful debts. Provision for doubtful debts account is created. Provision for doubtful debts account is a credit balance, is a credit balance. To close this account, to close this account is to be debited. This account is to be debited. It becomes a gain. It becomes a gain for the partners. Therefore, either partners capital account, including C, or revaluation account is to be credited, is to be credited. I believe you understood. Let us move ahead. Let us move ahead now. Illustration 3. Illustration 3. Anup and Swaroop were partners. The partnership deed, the partnership deed provides inter alia. First thing, that the annual accounts that the annual accounts be balanced on 31st December on 31st December each year. Next, that the profits to be allocated as follows: Anup one half, Swaroop one third, and carried to reserve account one sixth. Carried to reserve account one sixth. That in the event of death in the event of death of a partner in the event of death of a partner, his executor his executor will be entitled to the following will be entitled to the following: First, the capital to his credit at the date of death. Next, his proportionate share of profit to date of death to date of death based on the average profits based on the average profits of the three completed years last three completed years. Third, his share of goodwill based on 3 years purchase based on 3 years purchase of the average profits for the three preceding completed years. I believe you understood this. Drop a trial balance Trial balance as on 31st December 2018. Trial balance as on 31st December 2018. Particulars: debit, credit. Anup Capital 90,000. Swaroop Capital 60,000. Reserve 45,000. Bills receivable 50,000. Investment 55,000. Cash 1,10,000. Trade payables 20,000. 2,15,000. The profits for the 3 year were 2016 it is 51,000, 2017 it is 39,000, and 2018 it is 45,000. Swaroop died on 1st May 2019. Show the calculation of a share of profits, B share of goodwill, C draw up Swaroop's executor's account as would appear in the form ledger transferring the amount to the loan amount to the loan account. I believe you understood the question. Let us show part 1. Solution. Computation of sacrifice gain ratio. Old profit sharing ratio 3/6 in case of Anup. In case of Swaroop, it is 2 by 6, and reserve 1 by 6. It is given in the question. Profit sharing ratio, profit sharing ratio of Anup and Swaroop. Anup and Swaroop is 3 is to 2, for which Swaroop on death sacrifices 2 by 5, and Anup gains 2 by 5 on on Swaroop death. Average profits equal 51,000 plus 39,000 plus 45,000 divide by 3 equals 45,000. So we can say that goodwill equals average profits multiplied by 3 years, that is 45,000 multiplied by 3 years, that is 1 lakh 35,000. Swaroop share in goodwill equals 1,35,000 multiplied by 2 by 5 equals 54,000 to be borne by Anup. So share of share of profit of Swaroop equals average of last 3 completed years, profits multiplied by number of months divided by 12 multiplied by PSR of Swaroop, profit sharing ratio of Swaroop multiplied by profit sharing ratio of Swaroop. It is 45,000 multiplied by 5 by 12 multiplied by 2 by 5, 7,500. Next, let us prepare Swaroop capital account. Swaroop capital account. By balance brought down 60,000. By reserve 45,000 multiplied by 2 by 5, his share, that is 18,000. By Anup capital, goodwill 54,000. By profit and loss, suspense account 7,500. Total 139,500. 139,500. 2. Swaroop executor's account, transfer. Next is Swaroop executor's account, Swaroop's executor's account. Particulars amount, particulars amount. We need to record this transfer here. By Swaroop capital account, by Swaroop capital account transfer 139,500. To Swaroop, to Swaroop, to Swaroop executor's loan account. Transfer to Swaroop's executor loan account. I believe you must have understood. Let's see what we have done in this illustration. We have prepared, calculated the share of profit, share of goodwill, and then we have drawn Swaroop's executor account as would appear in the forms ledger, and then transferred to the balances to Swaroop executor's loan account. I believe it is clear. We are stopping here. We are stopping here. Thank you. Thank you.